The moment the announcement came, it was as if the financial world had been struck by lightning. Traders, analysts, and investors across the globe were jolted awake from their routine monitoring of charts and portfolios. On Monday morning, screens that were usually filled with the predictable ebb and flow of Forex pairs suddenly lit up with a currency that had long been whispered about in forums and investment circles but never fully activated: the Iraqi Dinar. The ticker symbol IQD blinked persistently, demanding attention, and within seconds, social media exploded with reaction videos, tweets, and speculation from both professionals and everyday investors. No one had expected such a rapid transition from rumor to reality, and the sudden surge of trading activity caused some platforms to momentarily slow under the sheer volume of orders being placed. Hours earlier, the world had been calm. Traders sipped their morning coffee, scanning headlines and making incremental adjustments to their positions. Analysts had been discussing the potential reactivation of the Iraqi dinar for months, some treating it as a long-term speculation, others dismissing it as a distant possibility. Yet, when the central bank's memo surfaced, leaked through an obscure but credible financial bulletin, the market shifted from idle curiosity to full-blown frenzy. The memo itself was cryptic, carefully worded yet loaded with implications, suggesting that Iraq's central bank had authorized the dinar to enter global Forex trading platforms, opening unprecedented access for international investors. The memo hinted at strategic timing, citing potential regional stability, ongoing economic reforms, and a subtle push toward strengthening Iraq's role in global trade. Within minutes of the announcement, trading platforms experienced a sudden spike in activity. Buy and sell orders flooded the system as traders attempted to capitalize on the unexpected opportunity. Charts that had previously displayed stable, predictable movements were now fluctuating wildly. The dinar's value oscillated as early traders attempted to set benchmarks, and the volatility attracted even more eyes. For seasoned investors, this was both exciting and nerve-wracking. The potential for profit was immense, yet so was the risk. New traders, seeing headlines and tweets declaring "Dinar goes live globally," rushed to create accounts on trading platforms they had never used before, some guided by a sense of FOMO, fear of missing out, while others followed advice from online forums and social media influencers who were already sharing theories about short-term gains. As the morning progressed, the story quickly evolved beyond numbers and charts. It became a global narrative. News agencies scrambled to cover the story, interviewing economists, political analysts, and Forex experts to interpret what the activation of the Iraqi dinar meant for global finance. Some speculated that it could be the beginning of a larger revaluation of currencies in the Middle East, while others argued that the memo was primarily a strategic move to attract foreign investment and stabilize Iraq's economy. Social media platforms buzzed with endless debates, screenshots of trading successes, and heated arguments about the long-term viability of investing in the dinar. YouTube channels uploaded reaction videos every few minutes, each with titles promising insider knowledge, strategies, or predictions. The speed at which the news spread was astonishing. From obscure forums to mainstream media, the dinar had become the center of the world's financial attention within hours. On trading floors from New York to Tokyo, professionals reassessed their strategies. Floor traders who had long ignored the dinar now found themselves analyzing historical data, cross-referencing political developments, and consulting with colleagues about potential price movements. The sudden influx of liquidity and interest had disrupted many predictions and created a temporary chaos that no one had fully anticipated. Conversations in brokerage offices shifted rapidly from regular pairs like USD/EUR or GBP/JPY to discussions of IQD price movement, liquidity, and its impact on broader Forex markets. The memo, although brief, had effectively rewritten the script for many traders, forcing them to rethink strategies and adjust risk assessments on the fly. Meanwhile, individual investors experienced a mix of excitement and confusion. Many had followed discussions on forums where the dinar's reactivation had been debated for years. Now, with the currency officially live, they faced the challenge of deciding whether to invest immediately or wait for a clearer market trend to emerge. Some bought large amounts with hopes of quick gains, while others cautiously watched the fluctuations, waiting for an opportune moment to enter. The sense of urgency was palpable. Every passing minute seemed to bring a new surge of activity, and online platforms displayed rapid-fire updates that made the market feel almost alive. Amid this chaos, the leaked bank memo itself became a topic of intense scrutiny. Analysts dissected each sentence, interpreting phrases and terminology that might indicate government strategy, potential interventions, or hints about economic forecasts. The memo mentioned partnerships with international banks, directives for liquidity injections, and references to monitoring the dinar's stability. Every word was debated, and interpretations varied widely, fueling both speculation and skepticism. Some believed that the activation of the dinar was the first step in a broader economic transformation that could influence oil pricing, regional trade, and even global currency hierarchies. Others cautioned that while the news was historic, the volatility inherent in such a sudden launch could result in sharp reversals or temporary spikes. As the day wore on, it became clear that this was not just another currency entering the Forex market. The dinar's global activation represented a milestone, both for Iraq and for international traders. Platforms reported record volumes, new accounts opened at unprecedented rates, and social media engagement on posts related to the dinar reached viral levels. Influencers and financial commentators offered tips, predictions, and tutorials, attempting to guide audiences through the new market landscape. The narrative was no longer purely financial. It had taken on elements of intrigue, speculation, and anticipation. Traders felt as if they were participating in a live experiment, witnessing history in real time, unsure whether to celebrate early profits or prepare for sudden corrections. By late afternoon, the initial shock had started to stabilize slightly, but the excitement remained. Investors were now attempting to analyze trends, establish reference points, and assess the implications of the leaked memo on future market activity. The dinar had become more than a currency. It had become a symbol of opportunity, risk, and global interconnectedness. In a single morning, a currency that had long existed largely in speculation had become a focal point of global finance, demonstrating how quickly markets could react to news, even in the digital age where information travels at lightning speed. The day closed with lingering anticipation. Traders knew this was only the beginning, and the coming hours and days would determine whether this historic launch would mark the start of massive financial shifts or be remembered as a fleeting moment of excitement. By midday, the frenzy surrounding the Iraqi dinar had reached a level few could have anticipated. Traders who had been cautiously watching from the sidelines now found themselves fully immersed in the chaos, trying to interpret every spike and dip in value. The leaked bank memo, which had initially caused a surge of excitement, was now the central point of discussion across forums, chat rooms, and social media platforms. Every word was dissected and debated. Phrases that once seemed innocuous now carried enormous weight, with implications for currency valuation, regional trade strategies, and even potential global economic shifts. Analysts began to compile data, compare historical currency activations, and attempt to predict how the dinar might behave in the coming hours, days, and weeks. The volatility was immediate and extreme. Buy and sell orders flooded trading platforms, creating a virtual whirlwind of activity. Some traders had placed massive positions in anticipation of rapid gains, while others hesitated, wary of the sudden swings and the potential for losses. As the dinar's value fluctuated, emotions ran high. Screens lit up with green and red indicators, reflecting sudden price jumps and quick corrections. Conversations in trading rooms became frantic. Experienced investors shouted advice and warnings, while newcomers scrolled feverishly through social media feeds in search of tips and predictions. Within a matter of hours, The activation of the Iraqi dinar had transformed from a news story into a global event that no trader could ignore. The leaked bank memo itself became an object of intense scrutiny. Analysts examined every detail, attempting to understand the central bank's strategy. Mentions of liquidity injections, oversight committees, and international banking partnerships hinted at careful planning, yet the lack of complete transparency left room for interpretation. Traders debated whether this was an effort to stabilize Iraq's economy, attract foreign investment, or quietly reposition the dinar in global currency rankings. Each interpretation carried its own risks and potential rewards, making the decisions of each investor critical and highly personal. Forums were filled with threads speculating about long-term trends, potential government interventions, and even comparisons to past currency revaluations around the world. Amid the excitement, new investors were flooding into the market. Individuals who had never traded Forex before suddenly found themselves opening accounts, transferring funds, and attempting to navigate platforms they barely understood. Many were drawn by the fear of missing out, having seen early reports of substantial gains and viral social media posts promising insight into the dinar's trajectory. Others were attracted by the sheer historic nature of the moment, wanting to be part of what could potentially become a landmark event in global trading history. The rush of new participants only intensified volatility, as inexperienced traders often react unpredictably to rapid market movements, creating opportunities and dangers for more seasoned participants. Meanwhile, veteran traders were analyzing every possible angle. Charts were studied for patterns, algorithms adjusted to account for unexpected volatility, and positions hedged carefully against sudden reversals. The dinar's sudden presence on Forex platforms had disrupted previous market expectations, forcing traders to adapt instantly. Each trade carried a heightened level of suspense. A small misstep could result in significant loss, while a correctly timed action could yield exceptional profit. Analysts worked tirelessly, issuing reports, forecasts, and recommendations to institutional clients and retail followers alike. Financial news channels ran continuous coverage, interviewing experts who speculated on the implications of this historic activation and the memo's underlying intentions. The day's activity was not limited to numbers and transactions. It also carried a narrative of intrigue. The leaked memo suggested that the activation of the dinar was part of a broader strategic plan, potentially influencing regional economics and international currency markets. Every price fluctuation was analyzed as if it were a signal, a subtle indication of policy shifts or market manipulation. Social media users recorded screenshots, created video analyses, and debated predictions, turning the day's trading activity into a spectacle that extended far beyond traditional Forex audiences. Blogs and online publications shared breaking updates, fueling further speculation and excitement. The dinar had become more than a currency. It had become a symbol of opportunity, strategy, and anticipation. As the afternoon wore on, patterns began to emerge, though they were often unstable and unpredictable. Traders noticed clusters of activity that hinted at larger players entering the market, and some speculated that hedge funds and international institutions were already positioning themselves for long-term influence. Each spike in the dinar's value drew attention, as it could indicate either sustained growth or a temporary bubble driven by speculation. Analysts warned that while the initial excitement offered opportunity, the real challenge would be navigating the subsequent volatility and determining whether the market would stabilize or continue to fluctuate wildly. The impact was felt not just among individual traders, but also within broader financial communities. Banks and trading institutions began sending internal memos and advisories, cautioning employees about risks and advising on strategy adjustments. International investors monitored developments closely, assessing how the dinar's activation might affect their portfolios and broader currency exposure. Every movement in the IQD pair was scrutinized for hidden trends, potential arbitrage opportunities, and indications of further government involvement. The stakes were high and the market's reaction was immediate and intense. Even as excitement reached a fever pitch, caution remained essential. Experienced traders knew that early gains could be illusory, and that sudden corrections were likely. Forums echoed with advice to remain patient, diversify positions, and avoid overextending in pursuit of quick profits. Analysts provided constant commentary, explaining that while the dinar's activation was historic, history also taught that sudden currency events could be unpredictable and sometimes dangerous. Despite this, the allure of being part of a potentially transformative moment in Forex history kept both newcomers and veterans engaged, watching and reacting in real time. By late afternoon, the market had begun to show signs of settling into a temporary rhythm. Patterns of buying and selling started to reflect emerging trends, and traders adjusted their strategies accordingly. However, the uncertainty of what would come next kept the tension alive. The leaked memo continued to circulate and be analyzed, each interpretation influencing market sentiment. The world had witnessed the Iraqi dinar's entry into the global Forex stage, and its implications were only beginning to unfold. The day had been chaotic, exhilarating, and historic all at once, leaving traders and investors alike to wonder how the next hours and days would shape the future of this newly active currency. By the end of the trading day, it was clear that this was more than a short-term spike in activity. The Iraqi dinar had arrived on the global financial stage with an impact that few could have predicted. It had drawn attention, speculation, and investment from around the world. Everyone watching knew that they were not just observing history. They were participating in it, reacting to a live experiment in the volatile world of Forex trading. The excitement, caution, and anticipation mingled in every conversation, forum post, and trading decision, creating a perfect storm of opportunity and risk. The dinar was no longer a peripheral currency. It was a focal point of global finance, commanding attention, strategy, and speculation like never before. By evening, the dust had begun to settle, but the impact of the day's events was still palpable across financial markets worldwide. The Iraqi dinar's sudden activation on Forex platforms had not only shaken traders, but had also captured the imagination of investors at every level. While some volatility remained, a clearer picture was beginning to emerge, allowing traders to start analyzing the longer-term implications of this historic move. The leaked bank memo, which had sparked so much speculation and activity earlier in the day, was now being referenced in countless analyses, blog posts, and video commentaries. Its careful wording, once a source of uncertainty, had begun to reveal subtle insights into the government's strategic intentions, leaving market participants eager to understand the broader plan behind the dinar's global launch. Traders who had spent the day reacting in real time now shifted their focus to strategy and observation. Early winners celebrated modest gains, though few were entirely confident in the sustainability of their profits. Those who had entered late were forced to make decisions quickly, balancing their desire to capitalize on momentum with the caution demanded by sudden price swings. The dinar's behavior had been unpredictable, reflecting both natural market adjustments and the influence of large institutional participants, whose moves were difficult to trace in real time. Analysts suggested that these institutions were likely hedging, testing liquidity, and establishing positions that could influence trends over the coming weeks, making the next phase of trading potentially even more volatile and consequential. Meanwhile, news outlets and social media continued to amplify the story. Headlines proclaimed the Iraqi dinar as the currency that shocked the world, while financial experts dissected each line of the memo for hints of future interventions, policy changes, or international agreements. Investors watched live updates, checking charts every few seconds, while influencers and commentators created content analyzing every trend, movement, and prediction. The dinar had become not just a financial instrument, but a symbol of possibility, an emblem of global market attention, and a topic that transcended traditional Forex boundaries. Those who had been skeptical of its significance now found themselves compelled to pay attention. understanding that a currency which had long been peripheral had suddenly become central to global financial discussions. Evening trading sessions were intense. While overall volatility had decreased slightly from the morning frenzy, the market remained active, with price swings providing both opportunity and danger. Some traders had placed calculated positions based on the emerging patterns, while others simply monitored the movements, waiting for confirmation of a trend before committing capital. Forums buzzed with analysis. Users shared screenshots of charts, debated the memo's strategic implications, and speculated about future interventions or currency reforms. Institutional participants were quietly positioning themselves, while retail investors attempted to decipher the signals, often relying on collective knowledge from social media groups, expert commentary, and emerging data trends. The sense of anticipation was unrelenting, as everyone understood that the first day of global trading for the dinar was merely the opening chapter of a much larger story. The broader implications of the dinar's activation began to take shape as economists and financial commentators weighed in. Many pointed out that this move represented not only a technical currency activation, but also a geopolitical and economic statement. Iraq, emerging from years of economic and political challenges, was signaling its readiness to participate more actively in global finance. By placing the dinar on major Forex platforms and opening the market to international investors, the central bank was encouraging capital inflow, enhancing transparency, and potentially stabilizing the domestic economy. Analysts debated how this would affect neighboring countries, regional trade agreements, and global currency hierarchies. Investors considered whether this move might influence oil pricing, attract foreign investment, or create opportunities for arbitrage across international financial markets. As the day turned into evening, the trading floor environment had changed from chaotic reaction to calculated observation. Experienced traders assessed trends, noting patterns that suggested institutional influence, and analyzed the dinar's correlation with other major currency pairs. New investors, though still enthusiastic, began to understand the complexities of trading a newly activated currency, including liquidity constraints, spread volatility, and the potential for rapid reversals. Financial advisors and trading educators offered guidance, emphasizing the importance of risk management and patience, reminding participants that historic opportunities often required discipline and strategy to navigate successfully. Social media continued to amplify the narrative. Viral videos highlighted early gains and losses, screenshots of trades circulated widely, and live streams offered real-time reactions from traders around the globe. Commentators debated potential scenarios for the coming days, weeks, and months, offering predictions ranging from modest appreciation to extraordinary revaluation. The story had taken on a life of its own, becoming a symbol of financial possibility, intrigue, and strategy. For many, following the Iraqi dinar's first day of global trading felt like participating in a once-in-a-lifetime event where the decisions made in real time could have lasting financial implications. By late evening, trading activity began to stabilize further, but the momentum was far from over. Analysts predicted that the next days would see continued fluctuations as the market digested the initial activity. Institutional players solidified positions, and retail investors adjusted strategies based on observed patterns. The leaked memo continued to be referenced in discussions as its implications were gradually better understood. Traders who had initially approached the market with uncertainty were now more confident, applying lessons from the day's volatility to refine entry and exit points, hedge risk, and monitor evolving dynamics of supply and demand. Investors began to realize that the activation of the Iraqi dinar represented more than a short-term trading opportunity. It had become a marker of change in global Forex markets, highlighting the potential for emerging currencies to influence international finance. Analysts noted that while volatility remained a challenge, the event demonstrated the interconnectedness of modern financial systems and the speed at which information, speculation, and capital could move across borders. The dinar's presence on global platforms forced traders, institutions, and governments to reconsider assumptions, reevaluate strategies, and prepare for a market landscape that was increasingly dynamic and unpredictable. By the close of the trading day, it was evident that history had been made. The Iraqi dinar had entered the global financial stage with a dramatic and memorable debut. While the long-term trajectory remained uncertain, the first day had already reshaped perceptions, influenced trading strategies, and captured worldwide attention. Traders reflected on the day's highs and lows, understanding that this was only the beginning of a new chapter for the currency. The dinar was no longer a peripheral asset. It had become a focal point, commanding attention, analysis, and engagement from participants across the globe. As investors logged off and platforms slowed for the night, discussions continued in forums, private groups, and social media channels. Predictions, lessons learned, and strategic insights were shared freely as participants digested the historic events of the day. The Iraqi dinar's activation had proven that a single currency, strategically launched and globally integrated, could command unprecedented attention, drive market activity, and create a narrative that extended far beyond numbers on a screen. For everyone involved, it was clear that this was more than just trading. It was witnessing history unfold in real time, a moment that would be remembered, analyzed, and built upon in the days and months to come.